Hello everyone, thanks for joining us today and welcome to this educational presentation of this tool that can kick your trading into overdrive. Now I'm going to share with you a particular tool and technique that I've been using for roughly 4 decades now that has really just taken my trading to the higher levels of, consistency, because it's something that I was taught once again some 40 years ago. And when I first started trading, I was really focusing on the wrong things, such as news or fundamental information and stuff. And once I was introduced to this tool, it really kicked my own personal trading into overdrive. Now, let me show you what I mean here. For example, this actually came out just a week or two ago. Yahoo Finance reported that Qualcomm was up after a rumor of Broadcom interest. So it was noted that Broadcom Ltd is considering a bid of more than $100 billion for Qualcomm, according to people familiar with the matter, in what would be the biggest ever takeover of a chip maker. Now, QCOM shares were up 5.58% after the rumors hit the trading floor. So whether this is happening or not, we see here, if we're looking at the chart, here's where the news came out. The stock jumped up tremendously and then continued to go higher. Now, with the tool I'm going to be sharing with you today, you actually would have been able, to see a buy signal back here, roughly a good 2 weeks before that news even came out. And even if you had missed that, well, the same tool would have generated another buy signal right here. So this is what I mean about taking your trading to the next level and kicking it into overdrive. There's no reason to wait for news or to look for fundamental information, because mainly if you have something that translates what the market wants to do in advance, you'll know prior to that announcement what the market wants to do, and it'll really kick your trading into overdrive. So this promises to be a great presentation. Welcome once again. My name is Steven Primo, President and Founder of Specialist Trading. And as you can see, our sole focus at my company is simply to educate you. About 8 years ago, I teamed up with ProTrader Strategies, and we formulated Specialist Trading, where all we do is educate our members in over 115 countries around the world and in virtually every state in the United States. All the things that I've accumulated in my 40 years of trading. So I started my career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years. 9 of those years I was a specialist. I know a lot of people aren't familiar with what a specialist does, but it doesn't mean you're any more special than anyone else. It simply means that you made markets in roughly 50 or 60 stocks. So if you wanted to purchase or sell that particular equity, you had to go to the trader who made a market or who specialized in that. So that's what I did during the crash of 1987. I made markets during that period. I also made markets during the bull market that followed after that. So I've traded in just about every market environment you can think of. And I've also traded just about every system or strategy you can think of. So in my 40 years of trading, I know what works in terms of consistency and I know what doesn't. So this is what we do at Specialist Trading and ProTrader Strategies. We simply educate you with the things that I've found to be highly consistent and that I personally use myself in my own personal trading. Now, as you'll see here, this indicator and tool, I should say, that I'm going to be sharing with you today, I use on a daily basis. I used it prior to, today before the presentation for my trading. I wouldn't, be trading without it. I'm going to show you how valuable it is. At the same time, how simple it is to apply. But as always, before we begin, we are required, first of all, to show you our disclaimer. I'm going to show you a lot of performance results using this particular tool, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So we're required by law to show you this first. So please take a moment to view it. And while you're viewing our disclaimer, I would also like to take this time, if you haven't done so already, to invite you to follow us on Twitter. Every day I post new and different information, anywhere from little bits of trading wisdom I've accumulated along the way to actual signals that our strategies have generated. In fact, yesterday, one of our proprietary strategies in trading the E-mini and trading the indexes generated a buy signal. As you can see what happened in the markets today. So lots of great free information. Feel free to follow us on Twitter. Okay, so as you can see here, we are all about educating you. As it's stated right here in front of you, my goal is not to force feed you signals, and my goal is not to tell you, like so many other websites do, what the perfect market is that you should be trading or what the perfect time frame is. I don't believe in that. Everyone should find their own way on what feels comfortable for them. That's the only way you'll become consistent. So as you can see, my goal is simply to teach, not to trade for you, but to teach you how to trade with a specialist edge. This is the same thing that was taught to me some 4 decades ago, and I believe what it's been able to sustain me for 40 years has been the same edge that was taught to me. Now, since this is an educational presentation, I want to take each and every one of your questions just as if we're in a classroom, but please wait till the very end of the class. If we stop for every question the way some other webinars are, we may be here roughly about 4 hours answering every question. So if you have a question, kindly wait till the very end, and I promise I will answer it. The only thing I will answer right now is the most common question, and that is this being recorded? Yes, it is. So if you're having technical difficulties, oftentimes if you just log off and then log back on again, everything will be resolved. But if you still can't see or hear the screen properly, we will send you a link to the recording, or if you have to leave early, if you can't stay for the entire presentation. But we should be done roughly in about the next 30 or 40 minutes, and then I'll reserve the last 10 or 15 minutes for any questions. Okay? All right, so let's begin. Now, I make no secret about this. When I first started trading on the floor, I had a miserable time. I was probably trading the way many of you may be going through right now. I was trying to pick tops and bottoms. I was looking at support and resistance. I was listening to all the trading gurus about institutional trading and where their buys and sell orders were, and all the conventional things that are supposed to work. But I wasn't showing any consistency in my trading. Sure, I would have a couple of good winning trades, but then I'd give it all back. So I was lucky enough to have some mentors on the floor. And here's what I learned trading on the floor of the exchange from my mentors. They saw what I was focusing on. They saw what I was listening to, most especially a lot of fundamental news. And they basically said, Steve, I mean, there's absolutely no reason to waste your time on these things because there is no consistency, because they're too discretionary. Someone can see a news event and say, well, that's very bullish. Or someone can see the same exact news event and say, no, that's very bearish. Or someone can see support and say, well, this is where support should be. And someone can say, no, that's actually resistance. So, things are too discretionary. We want things that are more cut and dry. And I remember what my mentors taught me, and it was so foreign to me, but it really made sense. They said, elite specialists on the floor of the exchange don't concern themselves with any of these distractions. And I thought about it, and I looked at the elite traders who had been on the floor some 40, 50, 60 years. They had been there grandfathered in, and they weren't concerned with the news. They weren't looking at earnings reports. They weren't looking at tons of indicators, and they weren't concerned with any of these things. So then they said, if they're not concerned, and they've been here for this long of a time, then neither should you. You shouldn't be concerned with any of these things. Okay, and it was tough for me to swallow at first, but once I started discarding all these things that I thought I was supposed to put my attention to, that's when I started to become consistent. So I asked them, I said, well, listen, I get it now. I shouldn't be listening to news. I shouldn't be focusing on 20, 30 different indicators. I shouldn't be, waiting with bated breath what every trading guru was telling me. Then what should I put my focus on? And they said, Steve, you should only be focusing on the chart in front of you. And they said that you need a tool that can translate what the market wants to do. And all you need to do is focus on the chart. So I said, all right, well, what's the tool? And they told me the tool is something I've been using now for 40 years. It's the PET-D. I'm going to show you how powerful this tool actually is. Now, we obviously changed the name of it for the PET-D because when I first started trading it, it was simply called the formula. It was something that you had to calculate and formulate on every bar, because what it did, this calculation translates what the market wants to do. It's not an indicator telling you how high the market will go or how low it will go. It just translates tick for tick what the market wants to do. So what we did, we took all the hard work out of it for you so that there's nothing you have to calculate. So ProTrader Strategies and I teamed up and developed a proprietary color bar algorithm that we named the PET-D. So there's just two colors. When you see a series of green bars, it's telling you that the market wants to go up. That's what the translation is. And when you see a series of red bars, well, it's telling you that the market wants to go down. Now, there are many ways to apply this. Let's show you exactly how simple it is, though. As we look at this chart net now, we see here that, well, it went straight up and then quickly changed on a dime. Well, all you would have to do is click on our PET-D tool right here on our new PTS Primo charts, and the colors automatically appear. And you can see that while the trend is up, all of the bars are green. And even though this doesn't pick the very top, it gives you an early warning of a trend change and well in advance of the sharp drop, you would have known that once we started changing to red bars, that a short-term downtrend was in place. So as you can see, the beauty of the PET-D is that it tells you which direction you should be trading, because it's simply translating what the market wants to do. And once you know what direction you should be trading, well, then you can apply any method, any technique, any strategy to that direction. So right away, you've given yourself this high level of consistency because you're in sync with the market. Most traders are out of sync with the market. That's why you lose. You're selling and the market goes higher and higher. You get stopped out with a loss. Or you're buying and the market goes lower and you get stopped out with another loss. It's because you're out of sync. Okay? So if you're in sync, you've automatically, half the battle is taken care of. So let's look at a few examples here. As we see in AJRD, now we were in a clear-cut downtrend, and it kind of looks like we're possibly bottoming. Perhaps we're just kind of consolidating to go lower. How do we know? Well, we apply the PET-D, and we see here that just with these 3 green bars, that's the market telling us that most likely that downtrend is over and it wants to go higher. And as we can see, coming into later on in the month, the market went much, much higher. In fact, it gapped open in the last bar there. Or if we look at TEVA, sometimes it takes a little longer to kick in. There's not much information we can gather from this. The market in this last week or two is just basically going sideways. If we apply the PET-D, we see here that it's not giving us a lot of information either. At this point, these 4 bars, it looked down. Then the market decided it wanted to be in an uptrend. And then the market decided it wanted to be in a downtrend. Now remember, what most people do wrong is that they think that this is a system that once you see a red bar, you sell, or once you see a green bar, you buy. Well, you have to put a little bit more structure to it in order to trade that way. And I'm going to show you in just a few minutes how you can do that. But at this point, what we're looking for is just a direction in trend. And then ultimately, it did kick in. So a lot of people say, well, Steve, this is great, but the news supersedes everything. There's no way you can fight a news announcement. There's no way you can fight a takeover or something like that happening. And you're right. And we're not claiming that the PET-D does that all the time. In fact, none of our methods or strategies are 100% foolproof. If someone ever tells you that, I would just run or turn off the webinar automatically, because that's not real. That's not realistic. In life, nothing works that way 100% of the time. What you're looking for is consistency, because consistency is what will sustain you. That's what sustained me for 40 years now. Not some method that promises the world and generates fantastic results maybe 1 year and then gives it all back in a couple of months. That will not sustain you. So we're looking for consistency. And let me show you how consistent the PET-D can be when applied in advance of the news. For example, here we see here that in October, Yahoo Finance reported the Dow hit 23,000 for the first time ever. Okay, the Dow Jones Industrial Average crossed the 23,000 mark for the first time on Wednesday. The Dow has now crossed 5 successive 1,000 point milestones since Trump was elected November 8th, when the Dow closed at 18,332. So we've really done really well. Okay, if we look at the chart here, we see here this is when October, when we crossed over that milestone. And what most traders say is they go, boy, I really missed this. How could I have known that this was going to go up this far? This is a weekly chart of the diamonds. That's the ETF that represents the Dow Jones Industrials. So looking at this in hindsight, you say, this is great, great for the markets, but I didn't take advantage of this. I wish I would have known that we were in such a strong market. Well, remember, nothing is 100% foolproof, but if you had simply applied the PET-D, we could have known as far back as here in November, roughly a year in advance, that the market was telling you it wanted to go higher. Now, we had no idea how high or how long it was going to last, but the market told us back in November, a year prior, that it wanted to go higher. Now, how did it tell us? Well, with the formula, the PET-D. If you see here, there's 3 weekly bars in a row that were painted green by the PET-D, telling us the market wants to go higher. Now, it's been green the entire time. So until we see a change in colors, there's no reason to think that the market is going to be going lower. Absolutely no reason at all. Okay, so as you can see, the advantages to using the PET-D, obviously, it gives you the security of trading in sync with the current trend. Now, it can also be applied as a stop placement method. And we've talked about that in other webinars. I won't go into that now, but it's a great way if you have a really nice trendy market. As long as something is green, you just stay long until the first red bar, all right? But then I think most importantly, the PET-D can supply you with numerous trading techniques that are based on the color bars. So here's what we're going to be doing today. I'm going to share with you a technique. This is a pullback trading technique that is the simplest but one of the most powerful ways to use the PET-D that can kick your trading into overdrive. It's so simple and just with a little bit of structure applied, because remember, the PET-D is not a system, it's not a strategy. We're just going to put together a little structure to share with you a technique. And a technique is simply sharing with you a high probability point of entry. Does not mean it's a strategy or a system. It doesn't come out with all the complete rules for stop placement, for money management, for exiting. A technique is entirely different. It's just sharing with you high probability points for entry. All right, so here's what you want to do to go long. First thing is that price must be above the 50-period simple moving average. We call this our buy-sell line, and what that means is that the overall trend is up. So if you see price bars closing above the 50-period moving average, that's what you want to look for a buy setup. Now, you'll ultimately see a few red bars appearing. So after a red bar is generated, you want to buy when the first green bar appears, okay? That's how simple it is. So remember, price is above the 50-period moving average. You apply the PET-D, and every once in a while you'll see a red bar appear, okay? Once a red bar is generated, you wait for the first green bar to appear, and that's your buy setup. Now, obviously, if we're selling, well, we're just going to do the opposite. Price now must be below the 50. If we see price bars closing below the 50-period moving average, every once in a while, a green bar, or maybe a series of green bars, will be generated. That's okay. We're going to be out of the market, but we're going to sell, go short, when we see the first red bar appearing. That's it. Now remember, this is not a strategy or system. We're not telling you where to get out. We're going to show you how many points you could have potentially captured, but we're not going to talk about stop placement today. We're not going to talk about exact entry and different entry points. We're not going to talk about exit points. We're just sharing with you how powerful this tool can be applied in a technique for finding very consistent entry points. All right, so let's look at some stock examples. All right, we see here the QCOM. Remember the news that everyone was saying, boy, how would I have known that that thing was going to get an offer to be bought out, whether it happens or not? How could I have known in advance? You know, there's no way to know about news, right? Because news just comes out of the blue when no one is prepared for this. Well, that's not entirely true, because as we see here, the majority of price bars are closing above the 50-period moving average. Sure, we have one bar that closed below, but then we quickly go back above. So for all intents and purposes, the price bars are above the 50. So that means we're looking for buy setups. That means every once in a while a red bar will appear, but when we see the first green bar after that red bar, that's our buy setup. So let's click on the PET-D in our strategy tab tool, and once we do that, the bars change colors. So we're above the 50 period, all of the bars are red, and here's our first green bar. So that was a buy setup on the 22nd or 23rd of October, okay? Well before that announcement came out. Now, nothing much happened, and if you, depending on where you placed your stop, you may have still been in the trade, or perhaps you were stopped out, okay? But guess what? We have another red bar and then a green bar closing above the 50. So this is our second buy setup, okay? So let's say we got stopped out of here for a small loss. We get back in, and that's when the news happened 2 days later. Did we have any idea that someone was going to make an offer for QCOM? Absolutely not. But the market was telling us with this powerful technique, and you had 13 points you could have captured off that. All right, let's look at RBA. At this point, where is the majority of price bars? Where are they closing? They are below the 50. So are we going to buy anything? No, we're going to be a seller. All right, so that's simple. We know that the only thing we're going to be doing is selling. So now we apply the PET-D, and we know that we have a series of red bars, all right, but then we have a green bar, all right, right here, an outline of a green bar. It's an update. We will sell on the very first red bar after that, which is the bar after. So we went short. Now, nothing much has happened. We've pretty much gone sideways, but now we have another opportunity to sell. We have a few green bars here. Here's our first red bar. So we're below the 50. We have another opportunity to sell, and a little over 4 points in the next 5 days, okay? Let's look at IBM. Obviously, we're only going to be a buyer. Why? Because we're above the 50-period moving average. Remember, we will never sell above the 50. This will give you higher levels of consistency if you only buy above the 50 and you only sell below the 50. So obviously, all the price bars are closing above the 50, so we're going to be a buyer. The next thing is all we do is click on the PET-D tab, and we see here that we had one red bar, and here was our first green bar. So that is our buy setup. In the beginning of October, the first week of October, And it took a little while for things to get going, but ultimately there was a huge gap up in the stock. Now, did we know it was probably some news or some event that caused the stock IBM to gap up 17 points? Absolutely not. But the market told us a full 2 weeks in advance. All right, let's look at HSIC. All right, the majority of price bars are closing below the 50-period moving average. We have one that closes above and then right back below. So this is telling us we're pretty much in an overall downward trend. We're not going to look to buy until we get majority of bars closing above the 50. So until then, we're just a seller. But how do we add a little structure to this? Well, we click on the PET-D tab. It automatically changes the colors. And as you can see, here are the green bars. Now we're looking for the first red bar after that, which is right here at the end of October. So we would have sold HSIC. Now remember, we're not telling you how to trade. You could purchase puts or have some type of spread strategy that tells you to go short the market. It's entirely up to you. Or you could have actually shorted the stock. It's up to you. But either way, you would have wanted to be selling HSIC. And after you did that, look what happened in the following 2 weeks. 16 points you could have potentially captured to the downside. How did we know it was going to go down that low? We have absolutely no idea. That's why we say where you want to exit with a profit is up to you. You could have taken a point profit. You could have held out for 15, 16 points. It's up to you. But we share with you in our courses all these different exit levels that you can take and choose to meet your needs. All right, let's look at XNET. All right, now in hindsight, some of them saying, boy, how did I miss this? I mean, there's no way I would have known that this stock was going to take off. I mean, it's such an inexpensive $4 stock. I would have loved to take advantage of this. Well, you could have. See, most traders like to play the victim, and they look at things like they say, boy, I really missed that one. That's the one that got away. But it doesn't have to be that way. The reason why traders say that is because, just the way I did, you're focusing on the wrong things. You're waiting for a news announcement or for the indicators to line up, but you're not listening to the market. And if you learn how to listen to the market, which is all we teach, you know these things a lot of times in advance. For example, coming into this huge run-up here, statistically or percentage-wise, we are consecutively closing above the 50. We close right on it, but most of the bars are closing above, all right, prior to that large run-up. All we had to do was click on the PET-D, and we see here that even though the price bars were above, all of the bars were red until here, the very first bar at the middle of October turned green. So that was your chance to go long, roughly about 4.5, and then 9 points. Okay, that's over 100% profit in the next month. So the market told you it wanted to go higher, but most of us don't listen to the market. We're listening to some guy in a chat room or some market guru on TV. I did the same thing, and it didn't work for me 40 years ago. So I don't think there's any consistency in it now if you do those same things. All right, BBBY, all right. Once again, where is price in relation to the 50-period moving average? Well, the majority of price bars are closing below. We have about 3 that close above, but that's not enough to get us to go long, and then we quickly go right back down below again. So let's add the PET-D to get some idea, and guess what? There was a sell signal right here, 2 more right here that may have gotten you stopped out, but then it generated another one. So you could have made money on this one. You would have maybe been stopped out on these 2, depending on where you decide to place your stop. But you could have gotten back in here. And either way, over time, look at what would have happened. You would have had a very nice potential capture of 10 points or so on this trade. Marvel, MRVL, okay, this has had some big run-ups lately, and now a lot of people are saying the same thing. Boy, how could I have taken advantage of this nice move in Marvel? Well, once again, the market told you it wanted to go higher. The first signal was by simply applying the 50-period moving average. You can all start doing that right now. Price has been above the 50-period moving average for weeks now, months now, so the overall trend is up. We don't want to sell anything, so right off the bat, at least you know that you should be a buyer of this, but we have to add some structure. So we click on the PET-D, and we see that the bars have been green the entire time until right here. There was a buy setup at the end of October, and then another one the first week in November, another buy signal. So even though the stock has been absolutely doing nothing for over a month, it issued 2 buy signals just about 2 or 3 weeks ago. And look what happened. The stock gapped up. Now, this is an inexpensive stock. It only went up 3 points, but percentage-wise, that's a very nice move. If we look at GE here, if we're trying to get more bang for our buck, well, we look at a higher price stock and something that's moving a little quickly down to the downside. Obviously, if anyone was buying this stock, they were losing money. And why would you buy something if the price is below the 50-period moving average? That's our first rule of just about 90% of all of our strategies. Never buy below the 50-period. You're only going to get yourself in trouble. And as you can see here, you only would have lost had you bought below the 50-period. The traders who have consistency are the ones who apply that first edge, which is look to see where price is in relation to the 50. So obviously we knew well back in July that price was below the 50, so we should only be looking at GE as a short, all right? Even though we had maybe one close above, we quickly went below, flirted with it, but then went back below again. Now, let's add some structure with the PET-D. We click on the PET-D tab, and it automatically changes the colors. So here was our first sell signal. We gapped down the very next day. Here were 2 or 3 more. Nothing much happened. You may have been stopped out, but if you got back in again, it's off to the races to the downside. So close to 9, maybe even 10 points potentially that you could have captured from the summer on into November. Now let's look at that chart we looked at earlier, the diamonds. That was the market, the weekly chart of the Dow Jones Industrial Average. Once again, most traders love to play the victim. They say, boy, I wish I could have taken advantage, but I was so scared about what was going on politically, or I was frightened about what was going on internationally with the world and different countries. You know, I just didn't feel comfortable investing or getting long the market because anything can happen. And we're at all-time highs. Remember, see how all of my justification is based on outside sources? Nothing is based on what the market's telling me. And what's the market telling me? Well, the first thing it's telling me is it's above the 50 period. So I'm going to be only a buyer as long as this weekly chart is above the 50. Now, secondly, we have to add some structure, though, because that's just telling us what side of the market we should be on. So we know we are a buyer, but how do we enter? Where's a very consistent point of entry? Well, I told you earlier, we could have entered well in advance, a good year in advance of this big move. We didn't know how high or how strong the move was going to be, but we knew that the market was telling us it wanted to go higher. Why? Well, because we had a series of red bars above the 50, and here was our first green bar in November of 2016, a full year ago. And since then, the weekly chart of the diamonds, the ETF for the Dow Jones, has gone up 56 points. That's thousands of points in the Dow, okay? And the bars continue to remain green. Now let's look at an entirely different market. I actually took these snapshots earlier today to show you that, you know, we're not just cherry picking the best stocks going back. This happened this morning and yesterday morning, actually. We can see here yesterday, okay, on a 30-minute chart, we are below the 50-period moving average, and then we started to have this large sell-off yesterday, okay, on a 30-minute time frame. So we know that we are going to be selling. But in hindsight, where could we have gone short? Well, we click on the PET-D, and first red bar after a green bar, sell here, another 3 sells here, 1 more sell here. You could have captured a total of 13 points just using this technique yesterday on a 30-minute time frame. Remember, we're below the 50-period moving average, so we're never going to consider buying anything. That's how you get this high level of consistency. Now today we had a very strong run up in the market. This is a 10-minute chart of the E-mini this morning, coming into this morning. And where's price? Obviously price is above the 50. So how could we have taken advantage of this big move? Well, we just add the PET-D. And we see after every red bar, the first green bar that appears is a buy signal. There's a series of 3 red bars. The first green, there's a buy. And then so on. We had a couple here and then 1 more here. And at the time I took this, roughly it was 15 points to the upside on the E-mini on a 10-minute time frame. That's $750 per contract, okay? Remember, we're not telling you that you would have made 15 points. Maybe you only got 1 point and got out. You were, you know, done for the day. It's entirely up to you. We do not, as I stated in the opening statements, we do not trade for you. We teach you these high probability areas and work with you to devise some type of method and let you run with it. You should be in charge of your own trading, not me. That's why we don't have chat rooms or trading rooms as specialist trading, because that's a recipe for disaster. If they work so well, why do 80% of all traders fail? So you should never try to emulate or copy anyone. You should learn from someone, but then fit it to meet your needs. Let's lastly look at the Forex markets. Here is a chart, a daily chart, or I'm sorry, a 4-hour chart in the Swiss franc, all right? The majority of the bars closing above the 50 period. We had maybe 3 bars closed below, but then we quickly went back up. If we apply the PET-D, Here's our first green bar that closes above the 50 after a series of red bars. So this was, I believe, just about a month or so ago in the middle or to end of October, and it's 170 pips to the upside on a 4-hour time frame. Okay, it's a nice trade to have just looking at 4 hours there. But what if we wanted to trade on a daily time frame? Well, here's the Australian dollar starting in October. Are we going to be a buyer of the Australian dollar? Absolutely not, because we're below the 50. We're only looking to go short. Well, where could we have taken advantage of this? Well, we click on the PET D, and we see here that we had a series of red bars. But now here's our first series of green bars. We're waiting for the first red one, and that's one right here. So you would have sold once this bar concluded, and 200 quick pips coming into this week in November, about $2,000 per contract. So you see, we've applied this to stocks. We've applied this to futures, intraday futures. We've also applied it to currency pairs. You can also use this if you trade the Bitcoin. You can also use this on commodities. Wherever there is a trend, that's where the PET D can be applied, okay? And even when there's not a trend, you can still apply the PET D, and because it'll oscillate between red and green, it'll keep you out of trouble because it will never give you a clear-cut, valid setup. So let's recap. We shared with you a simple trading technique using the PET D that pinpoints pullback moves in any direction and in any time frame. And I might add to that, in any market as well. So it doesn't matter if you say, well, Steve, you know, I don't trade stocks, I trade E-minute futures. Well, so do I, okay? And I use it on 5-minute charts, 10-minute charts, and you see how well it works. If you like to trade multiple markets, if you like to trade currency pairs as well as stocks, well, you've just seen examples in both markets in different time frames. So, as we go into the question and answer portion of our presentation, I want to ask you a question and ask yourself honestly, do you think this technique could have helped your trading this past year? I want to make this perfectly clear. We are just about at the end of the year, 2017. We've only got roughly a little over a month left. Is your trading anywhere near where you thought it would be at the beginning of the year? All right. Everyone in the world, myself included, when I first started trading, would set these goals and say, well, I want to make so much a month, so much a year from now on, and that way I'll be able to have that dream vacation or add on to my home or whatever, or buy that car I've always wanted. And we can usually tell by the end of the first quarter that we're never going to get there. Most traders have either given up or they've lost a fair amount of their capital, or they just never get going. Okay, so ask yourself, do you think this technique could have helped your trading? If you look back in advance and look back, I should say in the past, and see how you advanced for 2017, could it have done a lot better than what you're currently using? I think so. I think most of you will say yes, and it's so simple. Now I'm going to share with you today's special discount for all the attendees coming today. We're going to offer you the PET D. The PET D simply stands for what I developed with ProTrader Strategies. It's the Primo Early Trend Detector. Now this is what we call our roadmap for any market, because it literally can be applied to any market, any time frame, and any direction. We're going to supply you with the PET D. This is our proprietary color bar algorithm. This includes the add-on that will automatically color the bars green and red. But in the course, we're also giving you 2 continuation trading techniques as well as 2 pullback trading techniques. We're going to share with you the rules for our trailing stop technique, and you're going to get personal mentoring correspondence with me. So through email, you can always contact me with a question or idea how you want to apply the PET D. There are literally dozens, there are scores of ways to apply the PET D that I've used in my 4 decades of trading, and we share with you what the best ones are. Okay, so this is a great way to get your trading back on track and kick it into overdrive to finish out 2017 strong and to start 2018 with a bang. It's a great way to get back on track. Now, this application and the complete course runs for $29.95. We realize that not everyone can come up with a lump sum, so we're offering payment plans. So for a small deposit, you can still be up and running as soon as possible, probably as soon as today, this afternoon, with the PET D. Okay? All you have to do is contact ProTrader Strategies, and they can set up a payment plan with you. So you don't have to come up with $29.95 if you don't want to, and that's yours for life. So don't worry there. In the 40 years I've been using the PET D, we've only made one small addition to the PET D, and we offer that as well. So there's nothing else. There are no upgrades that happen every 6 months the way some other indicators and applications do. We don't believe in that. It's basically the same thing. You're going to be getting it for life. But if you cannot come up with $29.95, contact ProTrader Strategies. They handle all of our marketing of our courses and our discounts and payment plans, and they can devise a payment plan with you So for a very small deposit, you can be up and running and having monthly payments. You can email them, but I would suggest the best thing to do is to contact them at 310-598-6677. There are trading consultants manning the phones right now, and they would be happy to devise a payment plan with you. Now, the link at the very bottom will take you to the sign-up page. If you're ready to go and you don't care about a payment plan, you're ready to just purchase it and have lifetime access to the Pet D. Now, if you see on the chat box on the far right-hand GoToWebinar page, there is a live link there. The link on this page here that you see in front of you is not live. You'd have to copy and paste that. But in the chat box, they have put a live link there. So all you have to do is click that on, and it will take you to the sign-up page and a lot more information. Okay, so I'm going to leave all of this up here for you, and I promised you I would reserve the last portion for any questions that you may have. So let me open this up really quick here, and it says, will the Pet D work with the strategy using Renko bars? Well, Robert, I personally don't use Renko bars, but I don't see why not. We have traders that used Renko bars that don't have any problems with it. So yeah, wherever there is a trend, now we apply it to range bars, we apply it to candlestick bars, to open, high, low, close bars. So I don't see there being any difficulty with Renko bars as well. Okay, but you know, a lot of people have tried to figure out what the Pet D is based off of, and it's entirely different than Renko bar. So you know, it's something that you would have to you know, explore on your own, because we really don't use a lot of Renko bars. We use tick bars, range bars, standard open, high, low, close bars, and range bars. So it's up to you how you, or candlestick bars, I should say. It's up to you to see, but I see no problem with it. Other people are asking, is it based on moving average? No, you see, this is where most students fall into a trap. They're more concerned with figuring out what it's based on. And I can tell you right now, we're keeping it in-house because we've had a lot of outside interest in people leasing this, and from outside companies even purchasing it. So we want to keep it a private, a proprietary application. But having said that, it wouldn't make any difference if I, posted the formula online and said, this is what you have to calculate on a daily basis or tick by tick basis. And these are the rules to the formula. Because the secret in the Pet D is not in its formula. The secret to the Pet D is in its application, how you use it. So if I told you what you had to do to come up with the Pet D on your charts, most likely you'd still lose money because you wouldn't know how to properly apply it. Now, what I shared with you today was the way in which to properly apply that pullback technique. But if you don't use that, if you fail to use the 50-period moving average, or if you fail to look for the first green bar, the first red bar, you will ultimately not have consistency in your trading. So what you need with the real secret is someone who's been using it in their own trading for 40 years now on a daily basis, who can show you the right way to apply it to your trading. That's the real secret. That's what we're offering you, not some simple formula. So no, it's not based on moving averages. I can just tell you that it's based on momentum. That's about the only thing I can tell you. Okay. Lastly, people are saying, will this deal expire after a few weeks or months? Well, if you're saying that once you purchase the Pet D, will you have to upgrade or purchase it again? No. Once you have the Pet D, it's yours for life. And also another thing I might mention, once you become a student of mine, you're a student of mine for life as well. It's not as if you can only contact me for the next 2 weeks and then after that you're on your own. We have students that still contact me after 6-7 years that ask me a question or two just for a brief refresher course, and I'll always be obliged to answer them. So there's no worry about something ending after the Pet D disintegrating after 6 months and you have to re-up and purchase it again. It's yours for life, so you'll always have that. Okay, these are good questions. Remember, we're at the end of the year here. Okay, look at your own trading, and even though you don't have the Pet D right now, look at what I gave you with the 50-period moving average. Look at your past trades, 10, 20 trades. Most likely the ones that you lost on were because you were buying below the 50-period moving average and you're selling above the 50-period moving average. If you go back and look, I can almost guarantee you that that's why you had losses. You were out of sync with the overall trend. Now, if I'm giving you that, in good faith, sharing with you that technique today, and it's so simple, it's just applying the 50-period moving average. Think how you can really ramp up your trading once you have the Pet D, okay? So with that simple tool that you could start using right now, the tool of the 50-period moving average, think how much more powerful and how you can kick your trading into overdrive once you apply the Pet D with that. It really is that powerful. I'm stating this with full sincerity. I use it on a daily basis. I trade it with it all the time. I wouldn't trade without it. It's on virtually all of my charts. The PET D is always on that. So it's something that has helped me tremendously, and hopefully it will be able to help you as well. Okay. As we conclude, I would just want to say thank you so much. Remember, this offer is for a limited time. In fact, next year there are even rumblings about increasing the price of the PET D entirely to going up to close to $4,000. So you may want to take advantage of this right now. You'll lock in at that lower price, and you can also get a payment plan as well. So there's no obligation at all. Feel free to contact Pro Trader Strategies. They'll work with you. They'll try to make things work with you to fit your payment needs, and they'll answer questions for you with no obligations at all. Okay. All right. I hope you got a little bit out of this. I hope you got some information. I hope this really helped you. And in closing, I really wish that you take advantage of this, because I would have nothing more would make me happier than to be able to teach you and to be able to get 2018 started on the right track for you. Thank you so much for attending. I wish you the best of luck, and I look forward to all of you becoming students of mine in the PET D course. Thank you so much, and I'll see you next time. Bye-bye.